Hey everyone, Coach Investor back to another SoFi video for today. So this is bad, right? You've probably seen this headline 1,000 times already on YouTube. So what actually happened with SoFi? Why is everybody trying to scare you off your own investment? Yes, the stock is down significantly, about 55% year to date. So obviously not great, but if you've been following this channel for a while and the earnings report of the company, you know that the company is actually doing pretty well, all things considered, right? The CARES Act extension, etc. Beating guidance is no problem for SoFi. So what actually happened again? So we're gonna have a look at that. Obviously on Stockholders.io, you can see that it has high growth potential, struggling operations, pessimistic investor sentiment right now, which is normal if you see it's down 69% in 1 year. It has obviously underperformed the market. It's now a fairly priced stock. And as for the analyst consensus, 7 buy ratings, 5 holds, and 0 sell. So not too bad. Then for the analyst price target, so the average sits now at $11.12. I believe before it was around $14, but still quite nice upside there. Now, if you don't know, we're having a contest on Stockholders.io. It's free to enter, link down in the description and in the pinned comment. You basically go up, you sign up, you publish your portfolio and you try to beat me until the end of this year. Number 1 spot will get $250 in cash. The top 5 will get a 3-month stock card VIP access to the platform. It's pretty simple. It's free to enter. Brian Stoffel is already in it. Some others will join pretty soon. So I hope to see you there as well. So SoFi filed this form right here. So it basically talks about the annual meeting, which will happen on July 12th. Some things will be discussed there, but what's the main point of this video? It's basically this point right here. Appoint an amendment to SoFi's charter to give the board discretionary authority to effect a reverse stock split over the next year. Now, why did SoFi file a preliminary version of this proxy? A preliminary proxy is required to be filed with the SEC for certain proposals, including a proposal to stockholders to approve an amendment to SoFi's charter to give the board discretionary authority to effect a reverse stock split. Now remember, in my Amazon stock split video, I talked about a normal stock split where when you have 1 share and you might get 5 or 20 or 10. And this is the reverse one. So basically, if you have 5 shares, you might get 1 share in return and the price of the stock goes up. Fundamentally, nothing changes here. But there is more to the story. So what are the proposed terms of the reverse stock split? A reverse stock split is proportional to decrease in the number, but not the total value of shares of stock held by stockholders. Following a reverse stock split, stockholders maintain the same percentage of equity in the firm that they held before the split. For example, a 3-for-1 reverse stock split would result in stockholders owning 1 share for every 3 shares owned before the split. Immediately following the reverse split, the firm's stock price is, in this example, 3 times the pre-reverse stock split price. If stockholders vote to approve the reverse stock split proposal, it does not necessarily mean that a reverse stock split will occur. And this is extremely important, so I will repeat this sentence. If stockholders vote to approve the reverse stock split proposal, it does not necessarily mean that a reverse stock split will occur. Why am I repeating this twice? Because I've seen my fair shares of tweets of pretty large accounts as well, saying that, oh, you should sell your SoFi shares because they have, announced a reverse stock split. No, they have announced a proposal to vote on giving them the power to have a reverse stock split. The stock split did not happen. The reverse stock split, did not happen, might even not happen at all. I'll continue. Instead, it means that the board will have the discretionary authority over the next year to effect a reverse stock split and reduce the number of SoFi's outstanding stock by a ratio of not less than 1 for 2 shares and not more than 1 for 10 shares. The board would make this decision if it determines it is in SoFi's and its stockholders' best interest to do so. And here they explain in large why SoFi is considering a reverse stock split. So first of all, it also makes it a bit harder to short the stock. Not that much harder, but a little bit. Second of all, since the stock has fallen so much, now down to $6, it was down to $5 or so. So basically increasing the price of the stock might seem from an outside point of view that it's not really a penny stock anymore, even though a penny stock should be much lower than that, but you see what I mean by that. But I would like to explain you even further if a reverse stock split is good or bad. In the grand scheme of things, history tells us that a reverse stock split is not such a great idea. But let's go on SoFi's website itself. So I'm here on SoFi Learn. Yes, it's a website where they teach you a lot about the financial markets, and everything just fits the vision, right? So, are reverse stock split good or bad? So let's read. Whether a reverse stock split is good or bad can depend on why the company chose to initiate it and the impacts it has on the company's overall financial situation. At first glance, a reverse stock split can seem like a red flag. That's why you see all the FUD out there and the fear and everybody saying, sell, the company is crap. If a company is trying to boost its share price to try and attract new investors, that could be a sign that it's desperate for cash, which right now is not the case, might change in the future. But there are other indicators that a company is struggling financially. Poor earnings report, not the case again, or diminishing dividend could also be clues that a company is underperforming. In terms of outcomes, there are two broad paths that can open up following a reverse stock split. So, number one, a reverse stock split could create opportunities. Path A creates new opportunities for the company to grow and strengthen financially, but this is usually dependent on taking other measures. For example, if a company is also taking steps to reduce its debt load or improve earnings, then a reverse stock split could yield long-term benefits with regard to pricing. Could be something that they're thinking of right now. A reverse stock split could result in losses. On the other hand, path B could result in losses to investors if the new price doesn't stick. If stock prices fall after reverse stock split, that means an investor's new combined shares become less valuable. Well, it's the same with a regular stock split as well, right? The price gets reduced. If it doesn't work out, then the price can go down again. Doesn't really matter as long as the company is doing what it should financially, fundamentally. A path B scenario may be likely if the company isn't making other efforts to improve its financial situation, or if the efforts they are making fail. As we've seen in the last couple of quarters, SoFi is doing very, very well. Funny enough, it's actually been voted Best Investment App of 2022 by The Motley Fool, which if you want to support the channel, you can check out the link in the description to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Now I'll continue just a little bit more here. Should I sell before a stock split? Now again, this is a question you should ask yourself. You alone should decide whether you will buy or sell your shares. Again, a stock split, reverse or not, does not change anything fundamentally for the company. Very, very important to remember that. To summarize all of this, to summarize this question, basically, investors who have shares in a company that has a strong track record overall may choose to remain invested. I choose to remain invested because, well, I believe in SoFi. As we've seen the last couple of quarters, the company is doing everything it should be doing, so why would I sell? And to say the same thing here, a reverse stock split itself shouldn't impact an investor. Their overall investment value remains the same, even as stocks are consolidated at a higher price, but the reasons behind the reverse stock split are worth investigating, and the split itself has the potential to drive stock prices down. So there is obviously risk, there is maybe reward as well. The answers will be given obviously in the next quarter, or maybe we have an announcement from the company. Now again, there's going to be the shareholder meeting, so we're going to see if that basically passes. If everybody votes no, then there is no talk about a reverse split. And even if most people vote yes, and they have the right to do a reverse split, doesn't mean that they're going to do it. Just remember that. We'll see what happens. Overall, I have no plans on selling my shares. Maybe I'll add, maybe I won't. I'll see in the next coming weeks how the market reacts. But overall, a reverse stock split, yes, historically has been bad. But if the company is doing everything it should be doing, then it shouldn't really scare you off your investment. Obviously, do share your thoughts down in the comments below. If you like this type of videos, give it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button, and I'll see you all in the next video. Bye bye.